Hey y'all, how's it going? So today we're going to be talking about different savings accounts. So I was talking to a staff sergeant in my company the other day and I asked her how she was doing. She's preparing to move to a new assignment, so I asked her if she is financially stable to move. She said yes and told me the amount she had saved in her emergency fund. And I asked her if she had this emergency fund in a high yield savings account or a money market savings account. She had never heard of these options before, so I told her about each one, their advantages, and why her emergency savings should be upgraded to either one of these accounts. So I'll be using Navy Federal and American Express for illustration purposes, and will provide for you links for you to see where these numbers come from. So what is a standard savings account? A standard savings account is a financial account where the account holder stores money for an extended period or for a large upcoming expense like a vacation. It is uncommon to pay everyday expenses out of these accounts. These accounts tend to have lower account minimums than a high yield or money market savings account and offer a lower interest rate as well. I'll show you the 2.5 or 0.25% offered by Navy Federal real quick. All right, so as you can see here, here's Navy Federal's website. You can see this is their savings accounts. And if I scroll down here, you can see that their current APY is 0.25%. All right, so a high yield savings account is an account that offers a higher yield, of course, than a standard or money market savings account. These accounts typically have larger fees and minimum balances, but as I'll show you from American Express, they may not always have some restrictions. They do, however, have maximum withdrawals, so make sure you see how many withdrawals you can make and with what frequency you can make them. So now I'll show you American Express's website real quick. All right, so here's American Express's website. You can see this is their high yield savings account. And currently, as of today, they're offering a 4.25% APY. Lastly, we're going to discuss what a money market savings account is. It's kind of like a hybrid between a checking account and a regular savings account. Money markets usually offer a higher yield than regular savings accounts, but are also usually lower than a high yield savings account. They typically require a larger balance to be held in a standard savings account and also may allow you to pay everyday expenses out of them. You also may have check writing privileges and also have a debit card to these kinds of accounts. So now I'll show you a money market savings account from Navy Federal for reference. So here is Navy Federal's money market savings account. As you can see right now, they're offering an APY of 2.25%. So now I'm going to compare all these accounts together side by side so you can see their respective values in 1 year's time. This, of course, is assuming nothing like interest rate or the account value changes, just to eliminate some variables. And then each account is going to start with $1,000. All right, so here's our comparison. So we have account type here. We have standard, money market, and high yield. And they have months 1 through 12. And as you can see, both accounts all three accounts start with $1,000. So just to kind of show you where I'm getting these numbers from for the math. So if I click on this cell, you can see it highlights up here in the formula box up here in your top left. So we have B2. B2 here we look is the $1,000 here. Multiplied in parentheses, I have the 0.25 divided by 12 divided by 100 and multiplied by B2, which again B2 is the $1,000. So the reason why I have it the 0.25% divided by 12 divided by 100 is because the 12 is 12 months in a year. So you have to divide your APY by 12 to see what your interest rate per month is going to be. The reason why you divide by 100 is because the interest rate you have is a percentage, and percentages need to be divided by 100 to accurately reflect what they look like in dollars. And then you multiply all those things by 1,000, in this case B2, so that you can get on month 2 expenses. Now, a really cool part about Google Sheets is that you can take this formula we just made, highlight it here with this little blue dot, carry it all the way down, and it will carry that formula all the way down so that we'll see at the end of month 12, we've made $2.29. If we compare that to the money market and high yield savings accounts, you'll see we'll make $20.82 in the money market savings account. And then in the high yield savings account, we've made $39.66. So some final notes to leave you with before we finish this video. whoever you choose to bank with. And mind you, it can be more than one bank. You don't have to just go with one. Make sure that they're insured by the Federal Deposit Insurance Corporation, also known as the FDIC. This guarantees that if the bank you use goes out of business, the government will ensure that your savings account with a value of $250,000 or less will not be lost. If your account has over $250,000, you'll lose any money that you have over that amount. Please double and triple check account minimums and withdrawal limits. Some fees are tied to keeping an account minimum, and some accounts only let you withdraw from them a few times a month. Be sure you go with the bank that suits your needs. You are by no means going to save your way to retirement. However, should you choose to keep money in a savings account, some accounts offer higher interest rates and can mitigate the decrease in value of your money to inflation.